Hi guys, hope you guys are doing well. Just thought I'd do a quick follow-up video from last week's webinar looking at risk on risk of currencies. So it's Monday, start of the trading week, and we'll just see how our major markets have opened up. So you can now start to see if we look at the dollar index on a 4-hour time frame, you can see price coming off this previous level of resistance. We're now starting to see the price go lower. So you can start to see the dollars getting weaker, and on the back of that, we're starting to see the euro get stronger. So something to keep in mind as we progress forward. So dollar coming off. If we look at your Swiss franc on the daily, so if you look at the daily time frame, so A to B today we've moved higher, so we're indicating a weak Swiss franc. And if you look at the JPY as well on the daily as well, you can see we've got big buyers bar, so showing that the yen's been very weak. So all your safe haven currencies are weak on the day, which is promising again a stronger euro. The pound's not as strong as the euro, but you can start to see that most of your currencies are making gains against the weaker dollar. If we now move on to your gold, you now start to see if we look at the 4-hour time frame where we had this big push higher over the last few weeks based on what was going on in Russia and Ukraine. We're now starting to see the price recover, testing below 1960, which is a key level. All we need to see now is a few cycles, so a cycle below here to confirm the move to the downside. And we can look for potential shorts in the gold, and we'll have a quick look at silver as well. Again, if you look at the daily time frame, if we zoom out, see here again the big push higher due to that fundamental of Russia and Ukraine, and now you can start to see the break of cyclicity. So use that 1, 2, 3 reversal pattern like we like to use. You can see here we're in an uptrend, high highs, high lows. The market then makes a lower high and then makes a lower low. So now you can start to see the market's now starting to make a head and shoulders pattern on the 4-hour time frame, which is a very significant time frame. So now what you can do now moving forward, if you fail to get in this entry here or in this area here, all you need to now look for pullbacks, market make a lower high, and then look for continuations. You can use the 200 moving average as a target. Obviously, there'll be levels in between, but just on the basis, that's something you can do as well. Now, with the oil price as well, oil is something that we want to keep an eye on just based off because Russia is a large producer of the commodity. You can now start to see oil today has tested below $100 a barrel. Now, whether or not we see a pushback to the upside or we see continuations downside, something to keep an eye on. But with the price going lower, it could indicate a potential stabilization within the region, which is what we want to see. Also, we'll pay attention to your VIX. So if you look at the daily, strong rejection out of this area here. So this is a monthly area of interactions. You can see the loads of interactions on here. On the weekly as well, you can see we've clearly rejected it, and on the daily as well, you can now start to see sellers return. And obviously, with VIX has a negative correlation with your indices. If we now pay attention to your indices, let's look at the Dow Jones. So on the daily, we know where we are on the daily. If we zoom out, we're very low down. You see that previous swing low we've been around, and we see that buyers have returned. Now, I always say this: consolidation in terms of the markets is we're simply waiting for the markets to make a decision. So if the markets are consolidating in this area, that's not a problem. It just means we need to wait for the markets to make a decision, and then we can trade on the back of that. I've done a bit of you can see we're making a rising channel in this area. So buyers just bounce and sellers bounce off this area here. You can see at the open today, actually, we did see a buyer's response. However, we failed to break above the swing highs. So again, it reiterates why swing highs in terms of indices is so key. So all we need to see now is a break above this area. So you can see here we've got several times that prices failed to break above this area. And again here now, so imagine over the Asian session tomorrow morning, we just want to see the markets break above, and we could see a potential trading opportunity tomorrow, if not on Wednesday, when price does break above potentially. If we look at the German 40 as well on the daily, again, we know how low we are. Look at the weekly time frame, rejecting this level, so rejecting this area that we rejected before. We've seen lots of previous buy and selling interactions. So now the buyers are returning in this area, just showing that the buyers are winning the battle. If we look at the daily as well, you can start to see that big daily buyer's response, and the 4-hour now, excuse all the lines, but you now start to see the prices broken this downtrend by making a higher low. Now we're just going to see price break above these swing highs, very similar to your Dow Jones with these swing highs. So we just want to see price break above. You can see now prices consolidating in this area, which again is not a problem. It just means we need to wait for the market to make a decision. As soon as we see that, then we can take a move to the upside. So yeah, indices long, definitely on the list this week. And just going back to your FX now, if we look at Euro Swiss, so again, if we break down what Euro Swiss is, we want to see a strong euro on the back of a weaker dollar. So strong euro, and Swiss franc obviously being a safe haven currency, we're starting to see the safe haven currency become weaker. So that's giving the market direction. If we look at the daily as well, so let's start from the monthly. And again, you see this monthly level that price now starts to interact from. So you see what we've done here in 2011, and we can see what's happened here. This is when the Swiss franc was actually unpegged. that's sort of another story for another day. And now you can start to see buyers slowly returning back at this level. We've seen buyers return. So if we now look at the weekly again, you can see big buyers bars. This definitely does look like exhaustion. So the last push from the sellers. And now if you look at the daily now, we're potentially making a higher low. So if the daily is now presenting a high low formation, that means that we're no longer or potentially no longer in a downtrend. We still need to confirm this. On the 4 hour, however, now you can start to see with the time frame movement. This is your phase one, phase two, and now starting to see the market move back into the 4 hourly phase one move. Just be wary that if you're trading into the 4 hour 200 moving average, either use it as a target or look for the market to break above. But certainly on the 1 hour time frame, as we posted on the groups today, see here this decline wedge or declining channel priced in this area. The market now makes a high low, rejected the 200 moving average, high low, and that would have been a great opportunity. I know if you look at the 15-minute time frame, if I just mark out this area in this box, if we look at the 15-minute time frame, right, you can see here you've got a perfect 15-minute entry, which meets the core rules. So you can take that trade in here. RSI pointing up. RSI is also giving you convergence, so also making high highs, high lows within the RSI. So perfect good trade. So what we're looking for moving forward is either look for 1 hour cycle. So if the hourly moves up, makes a high low, brilliant take on the hourly. However, the hourly keeps going on and on and on. There's no real pullback. Look at your 15-minute time frames for entries. And again, just looking for cycles. So very similar to here. We've got phase one, phase two, entry. We're now looking for phase one, phase two, then further entry. So yeah, Swiss, if we look at pounds as well. So yeah, overall, just in summary, you can now start to see your safe havens are getting weaker. So gold getting weaker, dollar, yen, Swiss franc. And now we just want to see continuations. Should we see the markets turn over into risk on, then you know where your indices are. You can see Euro Swiss is at a nice area as well. If we look at Euro pound, Euro Swiss, sorry, as well. Again, if you look at the daily time frame, we can see how low we are, or we can see where we're coming back from. So this big push lower due to that fundamental, as you guys know, with Russia and Ukraine. And now we're starting to see buyers return at this area where we've seen buyers take control of price. And now we're just seeing continuation. So we just want to see price break above this daily 200 and move into this area where it could be our buy zone and looking to buy the market. For our time frame again, now you're starting to see price create your head and shoulders pattern. So there's your head, there's your right shoulder, very exaggerated head shoulders, but now you can start to see markers in consolidation, breaks above to the upside, 2050 crossover, and now you can, if you look at the lower time frames now again, you now start to see here's your swing highs, market starting to break above, retest. Now we just want to see continuations, and whether or not we look for, if the 1 hour bombs on, then again use your low time frames, 15-minute, 5-minute for additional cycles to find entries. So yeah, lots of opportunities out there at the moment. We're now starting to see, like we said last week, markets were at extremes. We're now starting to see those extreme play out. We're starting to see those markets move. So all we need to do now is really take advantage of these moves. And because, and I always say this, you may have 1 month of trading. The first, second, and third weeks, you may not do anything, but the fourth week, absolutely everything may be moving. And it has been a bit messy last week, and there were a few opportunities, but not the greatest, if I'm honest. But now we're starting to see the markets move. So plan ahead, build your watch list. If you want to book in coaching so we can do it together, not a problem, use the link below. And hopefully we'll catch up very soon. Okay, guys, take care. Bye-bye.